Cities. Oliver Slopes with Blue Line Futures. All right, Oliver, as we start the morning, though, let's start with Chicago. 447 3/4 for corn. Why are we watching that?
Well, the first pocket is 441 3/4 to 442 1/4. That's trend line resistance from the October highs. And if you zoom out, we've really been consolidating in a range between the August lows and October highs. We've been stair-stepping higher, marking higher lows. We've also been marking lower highs. So we're building up energy for a bigger directional move. And if we can take out trend line resistance near 442, I think that opens the door for a retest of that 447 to 450 level, which represents the November 8th high. So the market looks poised for a bigger directional move. It's just which way is it going to go? And potentially tomorrow's WASDE report is going to be the catalyst to give us new direction. Now, on the soybean side of things, we've been coiling, I guess you could say, as well, but more in just a sideways range-bound trade. We tried to break out early this morning, but failed just out above $10. That's going to be psychologically significant resistance into and through tomorrow's WASDE report. If we can achieve consecutive closes out above there, potentially that spurs some momentum buyers to propel this thing up near 10 1/4.
I know you watch the fund positions. What are we seeing on the row crop side?
Funds right now, net long about 88,000 futures and options contracts in corn and soybeans, net short about 72,000. And I think there's been a little bit of a spread trade there recently, buy corn, sell beans. And I wouldn't be surprised to see that maybe unwind a little bit here in the near future. I think there's a lot of negative news priced in the soybeans and that South American crop. Looking at some of those production estimates, you could make the case that maybe it's priced to perfection and there's not enough weather premium baked into that market. And then turning the calendar over and looking into the new year, you're going to want to entice some farmers to plant some soybeans too. So I'm pretty optimistic on grains as a whole, but I think soybeans from a risk-reward perspective, so long as we can hold the bottom end of the recent range near 975, I think there's opportunity there.
All right, so I mentioned the fund positions. Let's hold that thought for a moment. We'll take a break, and we'll come back and apply that to the livestock futures. Market Day Report continues after this. Bring back in Oliver Slope, Blue Line Futures, and we've been talking about those fund positions here. When we look at cattle, net longs, right?
Cattle, live cattle, feeder cattle, lean hogs, combined, those three, a record net long position as a whole. Individually, live cattle, not quite there. They're net long about 122,000 contracts. The record net long there was 155,000 back in 2019. For feeder cattle, we're right at about 19,000 contracts long. Net record 2012, 22,000. So knocking on the door there. And then lean hogs is really the big caution flag. 134,000 contracts net long for the funds. The old record was about 103,000. So they've blown the doors off there. And, the funds have been accumulating these net long positions on the thought of a bull market. And heck, they have been right for several months now. But even the biggest bull in the market right now has got to have some warning signs going off here when everybody's on the same side of the boat and you have fund positioning reaching a near record net long position. That's not to say the fundamentals can't remain strong and the market can't continue higher, but I think the risk of long liquidation is real if we do start to see some of the bullish narrative subside or even some technical levels give way.
So, Oliver, is this like playing the game of Jenga and you're starting to see it kind of wiggle a little bit? You can still pull one of those plugs out, but you're risking it, aren't you?
Yeah, you really are. You got to look at where the higher velocity risk is, and in my mind, it's to the downside right now. So if you've got downside price to protect, I think this is a heck of a spot to do it. In any three of those livestock markets, it's always good to buy protection or look at protecting prices when you can, not when you have to.
All right, Oliver, great to see you. We'll see you back here on Thursday. Oliver Slope, Blue Line Future.